This is Professor MoneyPigTrading, a former PhD drug researcher, now a data scientist and trader. Today we're going to talk about DIDI. It's a new IPO name, whether it's worth buying or not. Let's talk about it. And today is July 6, 2021. Hope you have a July 4 weekend, even though if you're a DIDI shareholder, you might not be very happy because of the over weekend news, but let's talk about it. So what's going on is IPO. Last week, DIDI is ADR, so it's basically a Chinese stock, a Chinese company. It's the largest rideshare company in China. IPO really nicely pushed up to $18 daily chart. This is daily chart, and over the weekend it gapped down to $11.58. So what's going on? So really quick, if you're interested or have any question, feel free to check us out on Discord, www.moneypigtrading.com. We also have Twitter, Instagram, and YouTube, MoneyPigTrading. Make sure to follow us to get the latest education contents and some trading ideas. And make sure to like this video so that it will help our channel tremendously. So if you haven't heard of DIDI, again, this is the world's largest ride-sharing company. Currently, they're operating in 16 different countries and have 493 million annual active users. So it's a pretty significant one, and once it IPO actually attract a lot of attention. The biggest belief thesis behind it is it actually has artificial intelligence, AI, self-driving technology and fleet underway. So if they can successfully develop and deploy that fleet, potentially can lower their margins and stay ahead of all the competitors, right? So that's really attractive, and a lot of retail investors are really into that. However, over the weekend, this is from the Chinese government website. Basically, what it says the translation is the DIDI app is actually illegally collecting some personal information, so they decide to pull it down the app, and nobody can use it right now. And it's a really big issue, right? Because DIDI's China market basically accounts for 90% of its revenues. So one more day, DIDI's app cannot be used and download, operated. Basically, DIDI just lose 90% of its revenues. And since they are, aggressively expanding internationally, losing such a big revenue stream is really a bad thing for especially a newly IPO tech company, right? However, in my opinion, DIDI shouldn't be fined as much as Baba, since DIDI has a pretty good social image, and also a lot of drivers are leaving based on the DIDI app. If the Chinese government banning for too long, a lot of people cannot make enough money. Either they will turn into competitors like the Chinese local rideshare app, or they might continue to lose their income, which can causing some problems in China, right? So, in my humble opinion, it shouldn't be fined as much as Baba. But after finish making this slides, just saw some news in the China. Like Weibo or some social media. It's basically saying there are two reasons behind this DIDI app being pulled down. First is DIDI didn't consult the Chinese Communist Party before shooting IPO in US. That kind of upset them. Or, of course, both are not confirmed. The second one is the Chinese Communist Party asked DIDI to do XYZ thing, while DIDI said we don't want to do it. So that's why kind of upset the Chinese community. We don't know Communist Party. We don't know which one's true, or maybe both are not true. But apparently the action is the app being pulled down. And because of that, in my humble opinion, DIDI app should be listed again after addressing all this issue. It shouldn't be like suspended forever, since it will just affect way too many people. But the question is really, in my humble opinion, is how long it will be suspended, right? If it's suspended for 2-3 days, probably okay. If suspended for 1 to 3 months, I think it's going to be a big problem for DIDI. Suspended for 6 to 12 months, DIDI is probably game over. So we just have to play by years. And right now, the biggest problem for DIDI is it owns 90% of the ride-sharing market in China already, but it's still not profitable. That really bothers me. If you're only 90% of the market and you still cannot make enough money to make your company or business model work out, that probably means your business model might have some problems, right? So that's one issue. And DIDI management realized that issue, of course, and they're addressing this problem by first developing the AI self-driving fleet that we just mentioned. And the second is to expand overseas. However, during the overseas expansion, there are a lot of overseas competitors doing their international expansion, like US, we have Uber and Lyft, right? Pretty strong and significant ones. And in Southeast Asia, Middle East, Europe, India, they all have their own local rideshare company, which are pretty strong, have good penetration and market share in locally. So DiDi is going to have a lot of problems, and it's always a cutthroat business competing with those local competitors. So yeah, that's the other issue I see in DiDi as well. The other is more on the compliance side, and you should know, not necessarily, quotation mark problems. First is DiDi actually two classes of share. It has Class A shareholder, is like you and me, retail traders. If we buy DiDi class stocks through the common US exchange, then we will be Class A shareholder, and you only have 1 vote per share. However, for a DiDi Class B shareholder, like early investors, their founders, they have 10 votes per share. It's not necessarily a bad thing, just people like us, investors like us, won't have that many voting power. Companies like that are also like Zoom. They have Class A and Class B. But the price action of the stock price is still doing pretty well because Zoom had a really good business model, as we know, right? So it's not necessarily a bad thing. But because DiDi has both dual class share, DiDi will never be included in the S&P 500 because S&P actually has a rule passed, I think, 2 to 3 years ago. Like if any stock has more than one class of share, it will never be included into any of the S&P indices. So in that case, you might ask why Berkshire Hathaway, BRKA, and BRKB is in S&P 500. It's because they were included back to like 2001 or 2002 before the rule being effective. However, why is it a big deal if DiDi is not included into S&P 500, right? Because once the stock is included into any S&P index, like S&P 100, 500, 250, whatever number, they will make a lot of mutual fund and ETF who track those index to buy that stock, and that will create a lot of support, momentum, whatever, to that stock. And DiDi doesn't have that privilege. But again, not necessarily a bad thing, right? Zoom does more than better, more than good, even though it cannot be included into S&P 500. The other thing you should know is any ADS stock, not just for DiDi, the financial transparency is not as good as regular US company, because those ADR companies, those foreign companies who IPO in US stock market, they're not required to report quarterly earning results like the 10Q. So you might not be able to see how the company performed throughout the whole year until they file the next annual report. However, DiDi does intend to offer quarterly earning results, so that's a good thing. The other thing is the DiDi IPO company in US is actually registered in Cayman Island. So in that case, the rules and regulations might be a little bit different than the regular US company that you should be aware of. Last and the most is DiDi actually has a good accountant. His name is Zong Tian. He's a partner at PwC, which is a reputable accounting firm. And this Zong Tian partner, he actually also audited other Chinese stocks, the big one like JKS, NetEase, NTES. So pretty reliable, which is a good news for our stockholders, DiDi. So that's the other thing you should know. The other concern I have, as I mentioned in the previous video, I'll put the link on the upper right corner. And it's actually a really important factor a lot of traders are not aware of, is the China GDP growth is actually slowing down right now. And if that's the case, potentially it can negatively impact DiDi's rideshare business, right? So that's the other thing you should be aware of. So if you still believe in DiDi after some concerns that we raise, better add them gradually. So like right now, if we drop today, maybe average down a little bit. But again, like we said, we don't know how long this suspension of the DiDi app will take. So always have some bullet, gradually add it down. And yeah, that's basically our opinions. Again, we're not registered financial advisor, just education contents. Please invest at your risks. And in our opinion, I know DiDi is very sexy name, everybody's talking about it, but there's still many other stocks you might never heard of it. It has been there for years, but actually those are the real gold mine in my opinion. So if you're interested, make sure to follow us on www.moneypigtrading.com. And we actually have a benchmarking account back to early May 1500, and now it's traded at almost 19,000. That's 1,100, almost 1,200% return. So